Alright guys, so in this video we're going to be going over the economic calendar, what some of these news events mean, the kind of effect they're going to have on the market, and in the end we're going to go over how I personally trade these and how you can use these to determine a potential weekly profile, right? So first things first, we want to mainly look at the news events that open at 8:30 a.m. These are going to be your big news events, right? These are the ones that drop at 8:30 before the New York session actually opens up are going to be the ones that have the most impact aside from FOMC, okay? So you guys will see you have a bunch of these right here that have the 10 a.m. open, 10 a.m., there's one at 5:10 p.m., which doesn't affect us at all, 8:15, and then 10, right? These are mostly going to be news events that don't have as much of an effect on the market. So these I usually tend to kind of overlook. The ones at 10 a.m., they still have a role to play in my trading, and I will get into that when we get into the chart section of this video. But I want you guys to just pretty much ignore this entire section for now. So we'll literally just pretend that this is just not here. Now, the ones that are opening up at 8:30 a.m. are going to be the important news events of the day, right? Or even of the week. So in this case over here, we have 8:30 a.m. unemployment claims. This is not as impactful as the non-farm, of course, right? As we know, there is a NFP protocol that is to follow, and usually when you have a news event on, let's say a Friday, even if you have high impact news on these days before Friday, these are going to be low probability, right? Why? Because this right here is the most important news event of the week. So the market will essentially, just be waiting for this news event to drop, right? The Friday is going to be the most impactful of the entire week. So market from Monday to Thursday, we are expecting not the best price action. And then Friday, obviously the market tends to clear up after that news event releases, right? So I want you guys to go into these weeks, especially with non-farm, and you want to expect a lower probability week. What do I exactly mean by that? That means that, if you have a specific draw on liquidity, or if there's somewhere that you expect price to go, more than likely price is going to be very choppy, or it's going to move extremely slowly towards your desired draw on liquidity, okay? So that's for the non-farm events. Now, next week we have CPI and PPI. You guys see it right here. These are going to be very important news events. And almost always these are going to be on Wednesday and Thursday. And you guys can see Wednesday and Thursday right here. And you guys see that Monday and Tuesday before CPI and PPI, there is no news here at all whatsoever, right? So what exactly does that mean in terms of a weekly candle? I want you guys to look at all of these. This economic calendar is framing a weekly candle, right? So if we have the first news event of the week on a Wednesday, and right here we have no news on Monday and Tuesday, then that most likely means that price is going to accumulate, right? And then right here on the first news event of the week is most likely our manipulation. And then this right here, this Thursday and Friday, is going to be your distribution, right? So you have a full AMD, a full PO3, where the market's going to open up, accumulate, then it's going to manipulate into the first news day of the week. And then obviously the second one is going to be your distribution, and then you have AMDX or AMD, So this is how I want you guys to frame the economic calendar. Now, this example, I've used CPI, right, because that's what's available to me. But FOMC, as we know, is almost always also on a Wednesday. And before FOMC, more than likely, you're going to have no news events, right? Nothing happens before FOMC usually. And if there is a news event, say it with me now, low probability, right? Very low probability. So I don't want to make this too complicated. What we'll do is we'll get into the actual chart, and I will break things down on the chart, how I look at this week and how I would expect a weekly candle to form based off of the economic calendar. We'll use a previous example, and then we'll use like a live example. So here we are in the chart. Okay, now we have a short week up ahead, right? I'm going to quickly just clip the economic calendar for the week, and I'm going to put it here so you guys can see exactly the news events that we have upcoming. Okay, so January 20th is a bank holiday, and President Trump speaks, right? So obviously this is going to be not a day that you ideally want to trade. This is a day that we are going to look at as an accumulation day for the week, right? Now, our first news event of the week is Thursday, right? Thursday is our first news event of the week. This is going to be important. And then Friday is our second news event of the week. This is your manufacturing and services PMI. But notice how the only event here that starts at 8:30 is going to be your unemployment claims on Thursday, right? So this is going to be the one that I give the most amount of weight to. So I know that something is going to happen on Thursday. Now, because Monday is a bank holiday, we expect that to be accumulation / manipulation. So this, what we'll do is we'll drop down into a lower time frame, and we'll see where the PD arrays lie and where this weekly candle could potentially go based on this economic calendar. Now, as you guys can see, the first 3 days of the week are pretty calm. So like these are pretty solid days to trade, right? There's no news going on, nothing super volatile that could pop up out of nowhere. Nothing that would, directly concern me too much, right? So what I would be looking for here is some slower, cleaner price action, nothing too crazy, right? And I would see what price is going to do from there. So on the daily time frame, you guys can see this is Friday, so the next candle that's going to open up is the Monday. And on the daily time frame, I really don't see too much here, okay? So what I'm going to do is, so again, we always start from top down, right? Top down analysis. I'll go down into the 4 hour and see what do we have here. Now, the first thing that your eyes should go to immediately off the bat, again, like put all the lessons together, right? All the lessons put together. We have a buy side raid here, actually. There you go, buy side raid. And once this buy side liquidity level gets swept, what do you see? You see candles close, right? We tried this candle right here, tried wicking lower, and ultimately failed to go red, right? If this was supposed to be a proper raid where sellers were going to take this thing, take the wick and then go lower, it would have happened on this candle right here. But as you guys can see, this candle opens up and pushes higher. It's green. So that means sellers are not strong enough here. So if we are to pull back, I would think of the pullback as a simple retracement during or while we still have bullish structure, and I would be looking to long out of there, right? So, if we take the premium and discount for this specific leg, you guys will see the discount of this leg rests directly under the midpoint of this fair value gap, right? So now that we know that, we know under this fair value gap, anything under this CE, right? So basically this lower portion of this gap is your discount. And so this is where you would want to place your buys, right? This is ideally where you want to look for them. So what I'll do is, now that we have that 4 hour marked out, the aligned time frame for the 4 hour is the 15 minute. So what I want to see is, I want to see this weekly candle open up, and then I want to see it properly manipulate into the low. So what I'll do is I will go to my indicator, turn on the weekly candle so that we can see it. And here you go. Here's our weekly candle. Off the bat, you guys can see there is no upside manipulation here, right? No upside manipulation. The wick does not manipulate anywhere. So we know that if this thing is to immediately move lower, it is simply to put in an open, a low, and then a high, and then a close, right? That would form a bullish weekly candle, right? Nice bullish weekly candle coming out of this fair value gap. Okay, so that is the idea so far. So let's see what happens. Again, no proper manipulation here at all. Even though, keep in mind, even though this weekly candle has gone green, there is no PD array here that price is bouncing out of. There's nothing here that price is bouncing out of. So is this a proper manipulation leg? No, it is not a proper manipulation leg at all. Remember, this is the Monday, the bank holiday Monday, so nothing is happening here yet. Okay, we keep going, and this right here is Tuesday's open. This is Tuesday's open. So now we are putting in a manipulation leg for the Tuesday candle. Where does that go? Exactly where we wanted it. Underneath the midpoint of that 4-hour fair value gap where we wanted our buys, right? So what we'll do is at this point, once we pull into that 4-hour gap, we want to drop down into the 15-minute. 15-minute is where you would start to look for your longs, right? We want to look for a change in state of delivery, and then we want our entry there. So let's say that this is going to be our change in state of delivery up here. You can also use something like this inversion fair value gap if you'd like. I'm personally going to stick to the change in state of delivery for this example. And let's see when we can get that. By the way, this is still Tuesday overnight. New York session opens up very, very shortly, and we will frame our trade off of New York. So here's New York open right here. This 9:30 a.m. candle is New York. And so now we're essentially just waiting for this change in state of delivery to occur. Right now, there is no trade. So while price is trading in between a high and a low, if we are simply just trading in between the high and the low, doing absolutely nothing, then you know that this is not something you want to trade. You want to sit this out. You're not always going to be able to get a good trade in, right? Especially on days where you have no news, so you don't have a volatility factor or a big liquidity injection aside from the candle opens, right? So these are days that you want to kind of take it easy. You want to lay back a little bit, most likely size down, right? So far, again, nothing has really happened here. We're still inside the range. And then what happens right there? We get our change in state of delivery, right? So once we have that change in state of delivery, you have several PD arrays that get left behind. This is going to be the first one after this structure shift, right? This market structure shift. This is going to be the first one that gets left behind. So these are areas where I would want to get my buys. So 15-minute fair value gap right there. Let's go down to the 1 minute. 1 minute, we want to look for the same exact thing. We want to look for a 1 minute change in state of delivery, right? Same exact thing. Here's our change in state of delivery here. So our entry would effectively take place on the closure with a stop loss below, and we want at least a 2R out of this trade, as I do with all of mine. And I have a perfect TP up here at these highs, right? That is the buy side liquidity level. Okay, so we'll have the buy side liquidity level there, and now let's see what price does and how it reacts to this area. Super, super slow. Again, this is to be expected on days like this. We're coming closer to market close now, so this is getting really, really unlikely to play out. We're coming up into 4 p.m. almost. Very, very close to the stop loss. This is the importance of picking good stop losses, right? You guys see how close it gets to the stop loss? One tick. And it goes and takes the TP as soon as market closes, right at 4 p.m. Eastern Standard Time. Goes and takes my TP for 2.11 RR. Okay, so that is how you frame the first trade of the week. Remember, the weekly candle just opened up, so it's not like, you know, we're not giving up on this bias just yet. Yes, we have properly manipulated the low. Yes, we have made a bullish day. Does this mean that we are done? Absolutely not. Absolutely not. We still have more upside left, right? So we have another buy side liquidity level up there, and you know, we can go and see how price reacts to that. And there you go. There's your buy side liquidity level getting taken. I'm not gonna, go down and into the lower time frames, but it does end up getting taken, and we do end up continuing a little bit higher, I believe. Yeah, and then there you go. There's the big dump. All right, so this is essentially how you're going to frame the week based off of the economic calendar. Now, even if you can get, so I showed you guys one example of a trade here, even if you can get one good trade in for the week, that is worth it, right? So you use the economic calendar to kind of give you your bias, know when to expect the volatility. At the start of the week, we were not expecting a ton of volatility, obviously, because we didn't have a lot of news, right? So because of that, we knew that these 2 days were going to be clean to trade, right? These 2 days were going to be clean to trade. And then these two were going to be the days where we would kind of want to be on alert for that news drop, because anything can be said and anything can happen, right? Especially when the orange man speaks, anything can happen, all right?